Greetings, members one and all of the Salivation Nation. Gold and silver are often thought of as the ultimate safe haven in times of economic instability. But in times of geopolitical instability, there is no safe haven for General Qasem Soleimani, who was killed at the Baghdad airport on Friday morning as tensions rise. We'll explore that and why gold and silver are acting as safe havens now with these new tensions. That's right. The yen, gold, and treasury bonds have jumped after Trump's airstrike on Iran's top military official, which was the tail end of the attack on the embassy in Baghdad. Very interesting how events are unfolding very quickly here as we begin 2020. This comes to us from CNBC. Safe haven assets are on the rise following a U.S. airstrike that has killed one of Iran's most powerful military leaders. Spot price for gold is testing 6-month highs at around $1,546 per ounce. It's a rise of more than 1% on the session. Silver is higher by almost 1%, while platinum and palladium have also jumped in price, not necessarily value in some of these cases. And the U.S. 10-year Treasury note also shifted suddenly, falling to its lowest yield in almost 3 weeks at 1.83%. Unsurprisingly, oil has leaped in value as concern rises over potential supply disruption. Sudden rush to safer assets came after President Donald Trump ordered a strike on Iran's General Qasem Soleimani, head of the Iranian Revolutionary Guard's elite Quds force. The Pentagon has confirmed that Soleimani was killed early on Friday by a U.S. airstrike on his convoy at Baghdad airport. The general's death marks an escalation in tensions between Tehran and Washington and raises uncertainty over Middle East stability. Iran's supreme leader Ayatollah al-Khamenei has vowed severe retaliation. They're going to do 3 days mourning first. Japan's yen, another asset that traders seek in terms of uncertainty, has risen 0.5% against the dollar on Friday morning, while the Swiss franc surged to 4-month high versus the U.S. currency. And as capital poured into safe haven assets, riskier investments into stocks were trimmed. The pan-European stocks 600 slid almost 0.8% by mid-morning in London. Most sectors traded lower, except oil and gas, which surged on the back of the U.S. airstrike. In London, the FTSE 100 slipped against 0.4% of the index, somewhat cushioned by rises to major energy stocks such as BP and Royal Dutch Shell. And it's interesting. This attack, is essentially was very forthcoming and was quickly enacted, but essentially Trump has been relatively patient considering what Iran has been doing in the region for quite some time. Really, this action is long overdue, but remember the attack on the refinery. There was no real retaliation against that, and then against the ships that were taken hostage as well. And so this is a move that is brought on and was escalated by Iran clearly. And so Trump got excellent intelligence and found out where this general was. And by the way, the next general down in line, and took him out as well. Looking here at Market Watch, gold settled at a 4-month high as Middle East tensions drive haven buying. We see gold futures soared on haven-related buying Friday after the U.S. airstrike killed the top Iranian military commander, sparking a vow of revenge from Tehran and a stock market sell-off. So gold for February delivery was up 1.54% on COMEX at $24.30, a gain of 1.6% to settle at $15.5240 an ounce. We'll look at the latest numbers here in just a moment. Level last seen on September 4th when bullion closed on $1,560.40 an ounce. March silver advanced 10.5 cents, a gain of 0.6% to settle at $18.15 an ounce. Gold and other haven assets were boosted while oil prices jumped and global stock came under pressure following a U.S. airstrike at Baghdad's airport, killing Qasem Soleimani, leader of the foreign wing of Iran's Islamic Revolutionary Guard Corps. The Dow Jones Industrial Average was down negative 0.81%, recovered some earlier losses, but was still trading 200 points lower a day after major U.S. stock indexes scored a few round of records. For the week, most active gold contracted gained 2.3% in second week of gains. Silver's most active contract tacked on 1.1%, also landing at higher for 2 consecutive weeks. Heightened geopolitical tensions threaten to destroy the risk on sentiment that's been driving the market since December after the United States launched airstrikes in Iraq, killing top Iranian military officials, said Rafi Boyadin, senior investment analyst at XM, in a note. The Pentagon said President Trump ordered the airstrike in a defensive action, alleging that Soleimani had planned to direct attacks on U.S. diplomats and service members in the region. Iran's supreme leader, Ayatollah al-Khamenei, declared 3 days of mourning for Soleimani's death and said that a hard revenge awaits criminals. But you keep in mind, that Iran has been actively supporting terrorism for decades, literally decades. And so this is a successful victory that I believe will probably slow that down, or at least change the calculus and weaken them. They're with the sanctions that Trump has put into place already. If there is any other attacks, we'll take out their oil refineries and further just crush their economy. And hopefully the good people of Iran will rise up and get rid of the theocracy that has plagued Iran for so long. And but nonetheless, this was a necessary action, but obviously does cause uncertainty in the markets, and because we don't know exactly what's going to happen. Everett Millman, a precious metals expert at Gainesville Coins, said that it could lead to a major escalation, and it could. But he also cautioned that prices for the yellow metal have hit some resistance at $15.50 an ounce, potentially signaling that absent from a direct confrontation, there is a very good chance that we could see gold sell off below $1,500 again. This is interesting. This is coming from a bullion dealer, saying that we could see gold actually sell off below $1,500 again. I actually hope so, because I'd like to buy some more. Weak data on the U.S. manufacturing sector also weighed on riskier assets, with the closely watched ISM Manufacturing Purchasing Managers Index missing forecasts and plunging to a more than 10-year low of 47.2 in December, marking its 5th straight month of contraction. Manufacturing will remain under pressure in 2020, wrote Oxford Economics lead U.S. economics Orrin Klatchkin in a note Friday. The headwinds of subdued global growth, trade policy uncertainty, and tariffs, along with the strong U.S. dollar, are expected to continue weighing on activity. In other metals trading, April platinum rose $5.30. Platinum is the metal to watch as well. Settle at $990.30. It's going to get close to $1,000. I think it's going to go over $1,000 soon. I believe that. Let's take a look and see what the metals prices are doing right now. The market's going to be closing very soon as of the recording of this video here. Gold is up $21, $15.50 right there where that resistance is. Silver is actually pulled back a bit, is flat, but still above that $18 level. So that is quite something to see. And then we see platinum up $984, and palladium is at $1992. It's really close to $2,000 an ounce there, up $26, a 1.34% increase. But gold is the clear winner of the day between the major metals there. But rhodium is something to watch. Look at that. It's up $240, 4.28% increase. It's a very fringe precious metal, very rare, and it is reflecting that in the price there. So it's very interesting to see where things are going. But the precious metals are up today, and I would encourage you to hold off a bit. Just wait until you buy we don't want to be victim and fall into, which I am guilty of being tempted by when prices go up like this, to think, okay, it's going to continue to go up, especially if escalations continue and Iran does some sort of counterstrike in the region, or in some manner or form. We could see continuing escalation there that could cause the metals to go up. But then again, it could be baked into what's happening now, an assumption there. And then we also have the trade deal that is going to be signed on January the 15th as well, that could possibly pull back or push back against some of these price increases. So, you know, it's one of those things when we see the prices continue to go up day after day and even week after week, it makes us wonder, oh, maybe we should be buying now. But there are times and there are cases where it's okay to hold back a little bit and just see what happens. If they do continue to go up, well, just buy what you can. Even if you can't get the amount that you wanted to, pull back a little bit and just get less of what you were considering, especially if you're a pure stacker. But interesting developments today. Post your thoughts below. I know some of you will have very different reactions to the airstrike, but you know, but I think the most important thing is how it's affecting the precious metal prices for most of us here in this community. So post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.